Hi everybody, welcome to Pure Technicals. Today we're going to be looking into Fibonacci expansion and retracements. To begin, basically Fibonacci I have here on my menu, but you can find them also in Insert, and you have Fibonacci, retracement, time zones, span and arcs. We're only really interested in the expansion and retracement tools. Just to make it quicker and easier for myself to use, like I said, I've got them here on the menu. So just looking how they work. We get the Fibonacci retracement up. You find a swing low like this point here, which was a low point, and you take it up to the swing high. Obviously, if you were trading this live, you wouldn't have any of this yet. You just have this reversal pattern here, and you see it start coming back down. So once you see a short-term retrace like this begin to happen, you can use the Fibonacci to find whereabouts the price is going to retrace to before it continues up. You have these levels here on the right: 0%, which is the absolute high; 100%, which is the absolute low; 23%, 38%, 50%, and 61%. Now 61% is the absolute low you want to see price action retrace. If it goes any lower than that, it's normally a sign of a reversal rather than a retrace. We can see price did break a tiny bit below, but it instantly broke back up above the 61.8 level and did continue up. If I go back a bit, just want to show you something here. We have this trend line that came down through here. The reason this retraced to 61% because normally on average a price will retrace 38% once it hits a level of support or resistance. So you're looking for it to come down between 38 and 50% before it will move up. So when you put this Fibonacci in, you can see a rough level of where you can expect the price to retrace before it continues, between 38 and 50%. When it goes lower than 61%, like I said, it's considered a reversal, but you normally get the price retrace to 61% after a trend line break. The first retrace is normally a large one, 61%, maybe more. So seeing that this is the most recent trend break, you had the reversal pattern down here, you had the price move up, and then you had the large retrace to 61%, and then price continued up. Now when you're drawing these, as I said, you want to take the reversal of a swing low, or if it's a reversal into a downtrend, you'll be taking the swing high to the swing low. In this case we're going to take swing low to the swing high. If we just move on to the next swing high and move that to the next swing low, you can see the next retrace was nowhere near as big as the original trend line break. As I said before, you normally get a large retrace after a trend break, and then the rest of the retraces are reasonably small. This retrace here retraced to 50% and then continued up, and we actually had a reversal pattern, which I spoke about in the inside bars and engulfing bar setups. You had it retrace to the 50% level, so you'd already have this drawn in when the price hits up here and you get this reversal. You see the price come down, and now you can see that when the price gets to around 50%, you're going to be looking to buy, and then you get this inside bar, which is a buy signal. So it would have been pretty obvious that price is actually going to continue up. Once you see the signal, you buy on the break above the inside bar, above the mother candle, and you would have got a pretty large move out of it. If I just move this up once more, take the swing low to the swing high, a nice pin bar reversal pattern up here, and a whole series of inside bars, about 4 inside bars, consolidation for about 4 or 5 hours there. That would have been a good sign that price is going to begin to retrace, and obviously it does retrace, and this time it goes to the 38% level. You can see the retraces are getting smaller and smaller as the trend moves up. If I move to the next one now, swing low to swing high, and this time we have it retraced below 61.8%. So as we said, this is when we're going to be looking for a full reversal of trend, not just a retrace. So we see the price come down below the 61.8% level. It does actually retrace back. It creates this double top chart pattern up here. A double top is basically where price hits a level of support or resistance, retraces, hits again and still can't break. That's a good reversal pattern in itself. So after seeing it break 61.8%, you'd then see the double top, and that would be a good sell pattern. And you can see this move that happened after the double top and after the sign that the trend was going to break was massive. It was 250 points in about 4 days, possibly 5 days, so about a week you're looking at around 250 points, which is massive. So you can see Fibonacci obviously works. That's obviously a very good way to find entries. If I just draw in a Fibonacci back over here a minute. Now, knowing that the 61.8% level is a key level to see whether a price is a retracement or an actual reversal, we can use the level below that as a stop loss. So when we enter a trade, if we see, for example, like I said earlier, this inside bar setup here would have been a good buy setup as a level of consolidation, as I explained in the inside bar lesson. We had a level of consolidation here with the inside bar at the 50% level. So you could buy on the break of the mother candle. Again, this is explained in the inside bar lesson. You buy on the break above there, and your stop loss would have been below 61.8%, because you know if price goes below that, then this whole signal is completely invalid, because below 61.8% it's no longer a retrace, it's a reversal. So whether the price retraces 23%, 38% or 50%, you always want to be holding your stop loss below 61.8%, and sometimes that's quite a big move, especially if you're using the Fibonacci on the daily charts. This is only a 1 hour chart, so it's a reasonably small move, and you'd probably be okay to cover it with a stop loss no matter what size your account. But you would want to be careful when it's all the way up here and you only get a 23.6% retrace and then you buy. You're better off to wait. If it only retraces 23.6%, you're better off to wait to buy until price gets back above the 0% mark, because if it only hits 23.6%, there's either a lot of power in the market or price is going to come back to 0 and then come down to say 38.2% or 50%. So if you're going to trade up a 23.6 level, you want to wait for a break above 0% rather than looking for a buy at that level. Now if we take a look into how you can place profit targets with the Fibonacci, we'll keep using this one here so we know exactly where we are. We've got another one here next to the Fibonacci retracement. I've got Fibonacci expansion, and again you can use this insert Fibonacci and you have expansion at the bottom. So if we use that, again you drag this from the same place as where you did before, swing low to swing high, but then you get an extra line here, and that line you want to place to where price retraced to. In this case it's just below the 50% level. Just going to change the colour so you can see it better. There you go, so price retraced down to this level, so that's where you put the third point. You can see you can move the third point to wherever the retrace may be. At this time it was here, and then you get these levels above the 0%, you get 61.8% and you get 100% expansion. And you can see these levels were actually significant levels. If you bought here and you put in a Fibonacci expansion, you could set your profit target for either 61%, which was there, that level of support and resistance, or the 100%, which actually did end up being exactly where the market looked to retrace. It didn't actually manage to retrace, it performed this this flag pattern here, where you have this triangle that was explained in the previous lesson. You have that triangle there. That could have been a good sign that once it got to 100%, price wants to retrace, but it didn't. It managed to break straight up through. But as you can see, 100% would have been a very good level to place your take profit target, and it actually would have hit it. Would have gone straight through, in fact. And if we move down, you can see you actually get another level, which is 161%, which is huge. It didn't quite reach that level. I'll just get one more example up. You can see this time price only retraced to 38%, and like I mentioned earlier, 38.2% and 50% are normally the levels you're looking for retrace to continue into a trend. So you have swing low, swing high, 38% retrace, you get all these buy signals here, you get a nice pin bar there. You'd be looking to buy then off of 38%. That's a pretty good sign that price is looking to push up through the level that it last found as resistance. If I just get the Fibonacci expansion out again, take it to here, and take it to the bottom of the retrace, you can see if you bought here on this pin bar, this buy pin bar on the 38.2% level, you drew in your Fibonacci and you bought here, you can see the 61.8% level on the Fibonacci was again bang on where the price hit, and again 100% is where the price actually reversed. So if you set your profit target for 61.8% or 100%, you would have got the entire move. Just going to look into an example now of how to draw it in a downtrend. It's exactly the same, but instead you take, obviously from swing high to a swing low, you draw it downwards rather than upwards, not upwards and back in time. You can see here price rejected the 50% level and then continued down. If I draw this a bit further down, you can see swing high again, and next swing low was there. That there looks like a news bar, but you can see it did reject 61.8% and did pretty quickly continue back down. If I take next swing high, next swing low, again 50% was the level it retraced to before continuing. So you can see it's very accurate. It can be used quite simply once you know how to draw it. Every time there's a new move, you take the new swing low to new swing high, or new swing high to new swing low. So it's relatively simple to use. So before we close this video, just run through these. The most important factors on trading the Fibonacci. The first one is after hitting support or resistance, price action on average will retrace 38.2% to 50% before continuing its trend. The next one is a retrace further than 61.8% is usually considered a reversal, but it's likely to happen on the first retrace after a trend line break. So if you remember back when I drew the trend line, once we had the trend line break, it did actually retrace just below 61.8%. This could have ended up stopping you out if you did enter that trade. But look out for it when there is a recent trend line break, because that's the time it's normally going to retrace 61.8%, or maybe more. It could even retrace 100% and perform that double bottom or a double top that we spoke about. So look out for that as well. You're better off not to trade the first retrace. You want to wait till that's over, wait for confirmation that it has been a retrace. For example, once price breaks up above the 100% level, then you know it's definitely a trend continuation. So just try and be safe and trade safely after the first retrace, because that's when you're going to get caught out. Well, that brings us to the end of the Fibonacci retracement and expansion video. I hope it can help you guys. Look forward to seeing you next time.